Welcome to the podcast, Tom.
Great. Glad to be here. Thank you.
Okay, my pleasure. So let's get started by giving the listeners a little bit of background about yourself. And why don't you just hit on some of the high points of your career to date?
Certainly, be happy to. So I started my career and was a partner at Accenture for more years than I want to admit. So we'll probably
Right.
move past that quickly. But I've always been in the software and high tech space, and kind of transitioned into payments and financial services as part of KKR's buyout of First Data back in 2007, I think it was. And since then have been involved in the fintech and payment space with First Data, Bank of America Merchant Services, Merchant eSolutions, and a few other stops along the way. That ultimately led me to Synovus and running the payments business here, as well as our now in-house startup, Maast.
So was the idea when you came to Synovus to do this startup as well, or was it really just it was the payments, the third-party payments role that you were most interested in? Tell us a bit about why you came to Synovus.
Yeah, I think the answer was both. I was originally asked to come help bring the merchant business in-house, but through that conversation, through that relationship with the executive team here, it was always, but there must be something more. There must be something more that Synovus can do to really be a meaningful player in the fintech space. Because if you think about Synovus as a sponsor bank, Synovus as the proud parents of TSYS, and a multi-decade player in the fintech space, I think there was always this belief that we could create more value, we could maximize the value of Synovus. So we started down that path. We started down the path of how is it that we could leverage the assets of Synovus to really kind of change the game when it comes to finance and embedded finance specifically.
Interesting. So this really, from the get-go, was it's been an embedded finance play. So maybe then tell us a little bit about sort of the genesis of Maast and how that all came together.
Absolutely. So we started really studying the problem, as I like to say, thinking about what are the assets that Synovus has, what are the needs in the marketplace, as well as what are the trends in the marketplace. And what we quickly came to realize that just like with embedded payments, financial services are going to become more and more embedded. Financial services are going to be sold through distribution channels. Financial services are going to become an integrated, seamless user experience, within software platforms. If you think about small businesses today, probably greater than 50% of small businesses in the United States today use some form of integrated software to run their business. Mm-hmm. So it's logical that financial services would be an extension of that. We did some work, voice of the customer, some primary research, and out of that, it became very evident that this is where the industry was going, and then there was a real greenfield opportunity for someone like Synovus to take advantage of that. So in January of 22, we formally launched Maast under the brand of Maast, with the objective of building out a line of business, building out a business, if you will, to go capture that opportunity.
Right. So why do a new brand that no one has heard of versus doing this on a Synovus, which everybody has heard of? What was the thinking there?
The thinking was that being that this was net new, being that this was a service line, an offering that really didn't exist in the marketplace, that we felt that creating some differentiation from Synovus while still being, connected to Synovus was the best way to go. And as well as Synovus is a five-state regional bank, and our appeal and our market and our go-to-market strategy is nationwide. So we felt that we could create a new brand, with some fun with it, the money as a service plus meaning of our brand to really kind of create some interest in terms of what we were doing.
Right. So that's where Maast comes from, MAAS with a plus sign, which is actually a T, obviously. So.
Correct. Money as a service plus.
Got it. Okay. And so just to be clear, is this a wholly owned subsidiary of Synovus, or do you have other investors?
No, is a wholly owned subsidiary of Synovus. We are set up with our own leadership team, our own technology stack, our own go-to-market strategy, our own pricing. All of those things are unique to Maast. So it is a in-house startup is probably the best way to think about it. We brought in a number of different industry professionals, as well as moved some high-performing people across from Synovus, so that we now have a team that really brings the best of the fintech world and the best of a regulated bank, if you will.
Right, gotcha. So, and are you still doing your old job, or are you 100% dedicated on Maast?
I am still doing my old job as well, running Synovus Merchant Services. Some might argue not well, but I still do have responsibility for that.
Right. Well, anyway, in this instance, we're focused on Maast. So maybe you could describe what are the suite of offerings that Maast provides.
So at its core, and this was our original premise, and it's proven to be very true in the marketplace, is that we believe that creating a unified underwriting and onboarding experience would be very powerful for merchants and customers of an ISV. So if you think about a software provider that is serving, let's just say, music stores, right? Because that is actually our pilot customer. He had developed a piece of software that serves brick and mortar music, as well as lessons, as well as repairs, as well as rentals, etc., in kind of one integrated piece of software. Well, by doing that, basically, as he goes out and markets his software to the end customer, to the merchant, that merchant's able to go through a unified underwriting experience, and when approved, they immediately get a merchant account as well as a business checking account. And a business checking account, that's not a new concept, but the integration of the two when it comes to faster funding, cash flow management, the ability to really see the full picture of their financial situation on the platform that they're using to run their operations, is really where the power comes in. So our first use case was that an integrated payments and business checking. We'll be moving into other products, lending, et cetera. Is going to be high yield savings. These are all things that are on our roadmap, so that for those financial services that are now available to that merchant just continue to grow. And since they've already been underwritten, the activation, if you will, or the adoption of those new products will be fairly straightforward. What we've also found is that there are larger partners, ISVs, SaaS platforms, that may have a very mature payments product. They may already be a PayFac, for example. Mm-hmm. And what we found is that there is also a market for us to bring just the financial services part of it, not the payment side, but just the financial services part of it. And that's what we're working on now, is a second use case, to where as an ISV, as a SaaS platform, you'll be able to resell just banking without the payments on your platform. Right.
So you're a SaaS platform and you want to have your own kind of branded bank account right now. So that's what but whether or not they take payments is, it's not as important, just to do that and then offer their own bank account that will be driven by Maast. But I presume then the ultimate bank account is held at Synovus, right?
It is ultimately held at Synovus, exactly. All this is reflected on Synovus's balance sheet. And you mentioned something earlier, Peter, I think is really important, is a branded bank account, a branded banking experience, which is what we also offer. It's up to the partner to decide whether or not they would like to brand it Maast or brand it to their software platform or create some third brand, which is what our partners did. They actually created a third brand to sit on top of all of their software properties.
Interesting. So then, what, like you mentioned in the music business, I mean, there's SaaS businesses for everything you can think of these days, it seems like. Is sort of, well, what is the target market exactly? And maybe you could start answering that question by, who are you working with right now?
Yeah, I'll give you some great examples. So one is an ISV that has created a vertically unique piece of software for the music industry. And so what's unique about it is that they've incorporated much more than just the brick and mortar retail. They've incorporated rental, leasing, if you will, repairs, those types of things, all the things that kind of go into what really happens in one of these music stores, lessons, etc. The other one is, which is one that we're boarding as we speak, is an ERP solution. It's an ERP solution that focuses a lot on wholesale distribution, lumber and building products and things like that. And so basically, we will be their payments and banking provider. And that integration is underway right now. And we hope to be going live with our first pilot merchants within the next couple of weeks with them. So being that, it's interesting, that actually is a horizontal solution, right? Because they serve various different industries, although they do have some niches where they're most strong. So there is that piece of it. We have a company that does software for gyms. So if you think about CrossFit gyms and other types of things, they basically have the software for that business owner to run their gym, and we've now added banking and payments to that solution so they can now resell it. Before, they were not participating in the payment stream. The gym was getting payments somewhere else. We've now brought that to the table so they can get it through the software.
Right. Okay, that makes sense. So, and you wrote a guest post on our website earlier this year that I'll link to in the show notes. But were you talking about that? Like software providers are a perfect match for embedded finance, and I'd love to kind of, you've just sort of touched on it already, but I'd love to sort of tease that out a little bit more and just describe exactly what you mean there.
It's interesting. If you think about how softwares continue to evolve in support of businesses, right? Used to be, everything was typically very horizontal in terms of those business platforms, but now they're very vertical. They're very specialized, and it becomes really the operating system, right? And I don't mean operating system like Linux. I mean operating system of what they use to run their business,
Sure.
Right? And so that's that portal, that screen, that laptop is where that merchant goes to many, many times a day, probably spends most of their waking moments in that portal running their business, whether it's scheduling, ordering, taking orders, payments, paying employees, all of those different things. It's happening through that platform, right? Well, to me, to us, it was just a logical extension that there's this whole other part of them running their business, which is the financial end, right? The financial end in terms of managing their money, paying their vendors, accounting, all these other different things that needs to come together so that portal is now incredibly more valuable. That portal is much deeper. That ISV software is much deeper. It's much wider. And so it becomes obvious that, that ISV, that SaaS platform, they can bring, exponential more value-added services to the equation so that small business owner, when they're sitting around their kitchen table at 11 o'clock at night, because they've been in the store all day, right? When they're sitting around the kitchen table at 11 o'clock at night, they've got a very seamless, unified customer experience so that they can manage their business, but not spend all night doing it.
Right. Indeed. And then what about, I'm curious, let's just take a step back, and you're a payments guy, and there's been so much change happening in the payment space in the last 5 years. And really, embedded finance, began in the payment space, when, and particularly if in the last decade with the likes of, Uber and that sort of thing, just sort of having payments kind of be part of the platform. What, maybe you could just give us from your perch as sort of, you've been in the payment space for a long time now, what's the state of play in payments? How what do you think are the interesting innovations that are happening today?
I think it starts kind of at the base level and then kind of goes up. So I think we'll forever see payments providers continuing to innovate on making their product seamless, making their product transparent, zero friction, all these different things that are important today, and they're going to continue to be important. There's going to continue to be advancements in terms of now applying machine learning and AI to other things. Because if you think about the underwriting experience today, right, and to a certain extent, a lot of it is done the way it's always been done, right? And I think there's now opportunities for payments providers and their partner ISVs to take advantage of some new tools like AI and machine learning to really advance that underwriting and boarding process, where there might be companies that using old methods appeared to be too risky, but using new methods, you can now suss it out and realize that this is actually an acceptable risk. So I think there's that piece, which is table stakes, right? Because that's kind of what happens all that. It's been happening in payments, since the beginning. I think the next piece of it is the user experience itself, right? Mm-hmm. There's so many ways that payments can be part of the experience in a very positive way. And I think you're continuing to see that both on the mobile experience as well as the online experience, to where payments just become more and more part of the value proposition. And I think the next wave is really going to be on different payment types, right? We all know faster payments are coming. We all know that pay by bank is coming, and all these different things that are out there. And so how is a payment provider going to really take those and make it a value added option, right? Because being able to do real-time payments or real-time settlement, it's obvious what the value of that is, right? But how do you really make that a positive experience for the merchant or their end customer? The same thing with pay by bank, right? I mean, pay by bank, the concept is great, but there's got to be value in that transaction to the end customer, or why would they adopt a pay by bank, right? So I think that's where you're going to see a lot of innovation around those new payment types coming along. And I think as well, like I said, all that getting wrapped up in, the whole, craze around AI, which is going to be really interesting to see how, use cases continue to evolve.
So let's dig into the details here, and what's involved in integrating Maast into into the software provider. How long does it take? What's the sort of what's the process like?
Yeah, absolutely. So first of all, we have multiple options depending on what the ISV is trying to accomplish. We have a full API forward stack, if you will, and those APIs are available on maast.com if anybody wants to go interrogate them, where an ISV can fully integrate the experience into their platform and their user experience using APIs, right? And that's probably the most advanced form of integration. And that probably takes the longest because it takes work on their side from the dev shop standpoint. But we can go full the other end, where people want to just be able to leverage our user experience, which we have a full banking and payments user experience, to where we can brand it, we can make it look just like use their color scheme, their brand, etc. But they're actually transitioning from their platform to our platform in a single sign-on, which is also really important on this, is that we want to make sure any partner that we're working with, that a single sign-on is available, so that at least to the merchant, that user experience is very seamless, and they're not coming in and out of platforms and signing in and signing out and all of that, and kind of everything in between. We've had some, for example, that have done a very tight integration with APIs from the payment acceptance and settlement standpoint, but then they've chosen to use our merchant portal, our UX, for the back end. When they want to go research a payment or look at an authorization or process a chargeback or whatever, they're fine to use our portal. But for the actual acceptance part, they've very tightly integrated.
Interesting. So I imagine that the time period would vary greatly depending on the complexity of what you're trying to do. But can you give us some sense of how long some of these different types of integrations like?
We're looking at about 3 months. Okay. To really, once they initiate a project and once we start working together, being able to get that done. That 3 months is an important time as well, because it's not we tend to like to think about overlapping activities during that 3 month period, because one of the things that we focused on from the get-go is, probably because of many of the people that are on the team, including myself, have been involved in partner-led sales, been involved in technology-led sales. And as I always like to say, the easiest part of going to market via a partner is signing the agreement.
Right.
The hardest part is actually making it a productive relationship. And so what we've done is we've built out what we call a performance marketing offering. And so from the very beginning, so during that 3 months of integration, we're working with the partner to activate the partner. We're working with the partner to come up with a go-to-market strategy. We're working with a partner in terms of how we're going to make offers and have a compelling call to action and all of that. And then inside of all that, if the partner would rather, we can actually run all of that for them. We've built a MarTech stack that enables us to run that entire customer acquisition process for them if they so choose. And we're getting a lot of interest in that because if you think about it, right? I'm a software provider. I've built a very elegant piece of software to serve whatever industry I'm working in, right? And now you tell me I got to go figure out how to sell banking?
Right.
I don't know.
Not the core competency.
Yeah, it's not really in my wheelhouse, but it is in our wheelhouse, right? And so that's where we're seeing a lot of interest in, especially in the beginning. I think sometimes they'll say, well, we'll let you run it in the beginning, but eventually I'll bring it in house.
Right. Yeah. Interesting. Which actually leads into my next question here, because we're in a competitive environment here. You're not the only offering for embedded finance. There's quite a few players these days. And, I can see you've probably started to answer this question, but I want to ask it directly. How is Maast standing out from the other embedded finance providers?
I think in a number of ways, frankly. First of all, one of the things, and this was by design from the very beginning, we're bringing what I like to call whole product, right? We're not bringing a series of APIs to link you back to your core banking system or somebody's core banking system. We're not bringing an SDK or all these other kind of things. We're bringing literally the whole product. Complete the integration, and then you have access to a fully functioning bank, a fully compliant bank, a fully well risk managed bank, because we are part of the bank. So we've taken all of the regulatory 135 years of regulatory experience of Synovus, and we've embedded that into Maast, which is very different than a lot of fintechs out there that are offering embedded finance, because what they're really doing is they've created an interesting front end. They've created a solution for integration, but then you turn around and there's still a bank on the back end. There's still a financial institution that may or may not have the same risk tolerance, if you will, as that fintech. And so there's there's inherent friction, if you will, in that. Just like there is in payments, right? There's always friction between the ISO and their sponsor bank because of maybe conflicting credit policy and conflicting risk tolerances and everything else. We've kind of taken all that off the table because it is the bank that is bringing the whole product. And so a ISV or a SaaS partner who wants to start offering this, we obviously put the agreement in place, the integration gets done, and then we really take it from there. We're running all of the banking services, all of the payment services for them in the background, on their behalf, so that they can focus back on what they do, which is build elegant software.
Right. You don't have to worry about another third party that you have no control over, which I'm sure is also a major advantage. Which I want to talk about compliance. You mentioned it there, and it's been in the news a lot this year with different fintech partnerships and different banks that have gotten consent notices and what have you. That this is big, and it's top of mind now. I think for fintechs for a long time it wasn't. So when you're thinking about compliance, because it's still, you're doing something like this is obviously all inside Synovus, but some of the things you're doing, Synovus has never done before. So how did you approach sort of the compliance part of all of this?
First of all, from the beginning, we built out our risk, regulatory, and compliance team in the very beginning, and started working with Synovus to make sure that we were building, adapting, enhancing the requirements of being part of a chartered bank. So if you think about risk policy, procedure, compliance, regulatory frameworks, the overall control framework, we've basically taken what is proven and what we know works because it was at Synovus, and then kind of put it into a digital form is the best way to think about it, right? So some things that may have been partially digital and partially manual, at Synovus, we've kind of fully digitized these. So for example, in the underwriting process, right? I mean, one of the things that we've been able to automate and digitize is the account opening for small businesses with multiple owners, which is if anybody's listening to this who is a small business owner and has tried to open a bank account, the trip to the branch with your passport and potentially in all your articles of incorporation and your business partner, and that very analog experience, right? We've made all digital, so there is no going to a branch. There is no, sitting down with a banker or whatever. We can do all that digitally. So that's what we took the requirements to open a small business multi-owner checking account, to do that in a compliant way, and we just made it digital.
Interesting. Yes, well, I have done that as a small business owner. Had to cut myself down to our bank branch and go through all that sort of thing. It's painful. So anyway, this, we're recording this in December. This is going to be this is out in the first week of January. It's actually our first podcast of the year. So I want to the next few minutes, I just want to do a look forward. So firstly, when you're looking at 2024, what are the major trends in embedded finance that you think are going to be in play this year?
I think more and more adoption. I think you're going to see more and more players that are either trying to do what we're doing, which is kind of the whole solution, or bits and pieces of it. And I think you'll probably see more on the niche point solutions, right? Here's a very specific lending product, right? Here's a very specific deposit product or something like that, where they're kind of taking that more, single product solution. I think that you're going to see more and more of the incumbents, the larger processors, starting to really look hard at this, starting to get really focused. And you've seen it. There's been some acquisitions by, some of the big three, that point to, where they're heading in the space, where they realize that there is value in extending, if you think about payments as financial services, just extending the financial services offering, and making that available to the ISV community. So I think that is clearly going to continue. And I think that you're going to see more and more ISVs continue to evolve in the PayFac space. I think that there was a big rush towards, becoming a PayFac X years ago, and then kind of the retreat of, wow, that's really hard, right? and then now I think you're going to see more thoughtful people going into that space. So you'll continue to see, more and more mature software providers becoming true PayFacs, which I think is going to be interesting, especially as sponsor banks and card brands and others try to manage and regulate all of that. And I think that the last piece would be is that as real-time or faster funding comes online, which it is, how does a payments company, how does an embedded finance company turn that into value, right? And it comes to, obviously the value is speed, right? In terms of how does a processor, create much faster funding, real-time funding. Maybe it's, today, if you think about how the way settlement works, and it's a very batch-driven process, right? Is there an evolution to more of a, more continuous funding model that can happen in that type of model? Problem is, though, when you do that, there's inherent risk, which is why I think some of the AI and machine learning things are going to have to come along in parallel so that you can manage the risk of faster funding. Because today, things are settled 2 days because that gives the processor, the time to make sure they're managing the risk. Well, expectations, the time windows are going to continue to compress. So I think on the back end, you're going to have to see more and more sophisticated tools being put in place to allow processors to fund faster and meet customer needs, but do it in a very, hopefully controlled manner.
Mm-hmm. Interesting. Okay. So then last question, as you look further down the road, I'm curious, particularly in like the small business space where, as you say, all these businesses are in a vertical, they have some sort of ISV they work with. Do you think that there's going to be a majority or a large number, say by the end of the decade, that are going to, someone who might have had a banking relationship with their local community bank or one of the major, national or regional banks, that they're going to now have their banking relationship, their primary financial relationship is going to be with their software vendor. I mean, how do you see that playing out long term?
Obviously, I'm biased.
Yeah, I realize
and
that.
the answer is yes. But I think you have to kind of parse it. It's not a one size fits all, right? I think there are millions of small businesses that have relatively straightforward financial services needs, right? They need a place to bring money in. They need a place for money to go out in terms of paying employees and vendors, and they need a place to keep the money, right? And beyond that, they don't have very complex needs. Now, there are obviously going to be lots of businesses that are either larger and they have more complex treasury needs, and they have more complex, higher capital requirements and other types of things. And that is, there's always going to be a role, for financial institutions to partner with businesses to help them with, their treasury needs, their capital needs, et cetera. But if you think about the number of total businesses in the United States, the vast majority of them are small businesses, and we believe that that's where our sweet spot is, and that's where you're going to see more and more adoption of people saying, "Look, there's a ton of value in me getting my financial services directly through the software platform that I'm using to run my business on a daily basis," and that's what we believe we're going to continue to see the adoption.
Okay, well, we'll have to leave it there, Tom. But I think it's a safe bet. There's going to be a lot. That's going to be a growing segment of financial services. I think that's for sure. Anyway, thank you so much for joining us here on the podcast today, Tom.
It was a real pleasure. Thank you, Peter.
Okay, see you.